The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're talking taxes this whole hour. And if you have any questions, give us a call, 803-0930, 803-0930, star 930 on a cell phone. We have, of course, my buddies, Tiffany Fabian in studio. Hey, Tiff.
Hey, happy Saturday. Happy Mother's Day.
Thank you.
Mom.
Happy Mother's Day to you, too.
I love
and
you.
Christopher Fabian, I'm not going to say Happy Mother's Day to you, Chris.
But I'll say, hello, Esther.
Hello, Christopher. Okay, so we're talking taxes, and it's hard to believe, but they extended the federal tax filing system till May 15th.
Yep.
And that's
Yes.
Monday.
It is.
And we're ready to do whatever people need done, extensions or their tax returns. We have 3 offices to serve them, right?
Correct. Tomorrow,
Niagara
not
Falls.
tomorrow, on Monday, we have the West Seneca office open, our Niagara Falls office
And
open
Tonawanda.
on Military Road in the Wegmans Plaza, and our corporate office in Tonawanda. And today they're still open for another 2 hours, so you have time to get there today and get it done too if you need to.
Right. And if you cannot, even on Monday, get your taxes returns done, we can also do an extension for you, which will extend the deadline, not to pay, but to file the paperwork.
It was so cute. 2 days ago, I was at a patient's house because I do that. And I says, oh, where's your wife and your daughter? He goes, oh, they're at EG Tax getting their tax return done. I said, oh, my goodness, what a small world, you know?
Yep, that's true.
Yeah.
That's true.
Nice.
I was with a friend the other day, and her mom and dad, she said, use us, and I had no idea. So that's a wonderful thing. We certainly want to help people. So we have our corporate headquarters open on Colvin in Tonawanda, our Niagara Falls office by Wegmans in Niagara Falls, and our Southtowns office, 2020 Ridge Road in West Seneca. Those will be open Monday until what time, Chris? Do you know?
Monday till 7.
Monday till 7.
Yep, or to the
Okay.
last person walks out the door. If that's
Right.
9 o'clock, that's 9 o'clock.
All right. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Since we're looking, and I know we have callers coming in, but since we're looking at the end, finally, of 2022, some of the things that closed and they're not going to reopen are the child tax credit, for instance, right?
Yep.
Right.
I mean,
right.
the way it was
right.
last year.
The 30. You mean the year before when it was 3,600 or?
Right. It used to be $3,600 for children under 6 and under, and for children under the age of 18, it was $3,000. But now it's $2,000 for children under the age of 17,
That's right.
Right.
and that's not going to change.
It is not.
As far as we know.
Right.
Because
That's
they
true,
can
as far as
change
we
it
know.
in a blink of an eye, but
Right. And the daycare credit that was so big in 2021 is gone in 2022 back to the way it was, and that's not going to change.
yeah, I felt
unless
so
they change the law.
so bad for those parents because you've seen $15,000, $20,000 to send their kid to childcare, and it's just astronomical. And yeah, they do get a little credit on their tax return, but how they changed it for 2021 was just a blessing for them, and
Right.
it was taken out from under their feet.
Right. So, and we say this because if that was your situation, and I was reading an article the other day that the IRS was actually down 1.3% returns this year, and you say, how could the IRS be down? Well, because people didn't have the incentive to file tax returns because they weren't getting those refunds, especially seniors that might have gotten earned income credits, that went by the boards.
Right, or-
So people that were filing in 2021 to get money back, they didn't have to file in 2022, so there's less people filing returns.
Right? Like the parents who didn't work if they had children, they still got the child tax credit as an additional child tax credit. So they won out in 2021. And this year they came in and were like, I'm sorry, not this year.
don't have
They
to
could
file.
use their income from the year prior, too, for
get
the
the
earned
EIC,
income credit,
yeah.
too.
Okay, I'm Esther Gillies, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we have, is it
Dan.
Loon?
Dan, line. That says line.
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 Okay, Dan. Hey, Dan.
Hi, good afternoon, Esther. I have a question. My mom passed away in 2016, and I purchased the house from the estate. We had it appraised at $105,000, so I paid up each of my brothers their 1/3, and I took the house, and I've had it for about 5 years. I'm putting it on the market, and I'm wondering how not to get crushed by New York State and the IRS for capital gains. Because
Are you living there?
no, my son was living there, but I live in Jaffrey, New Hampshire. But I retained the house. My son lived there, and we're selling it. And it looks like I'm gonna get about $195, which is $90,000 above my base cost.
Were you charging him
but
rent?
here's the thing. Did you rent it out to your son, or did you just let him live there?
Well, yes, I let him live
good.
there.
Well,
I didn't
now
do-
there's a broad question.
Yeah,
Or
I
broad
let him.
answer.
I let him live there, but he was only paying me enough to cover property tax, water, and a loan we had to take out for the roof.
So here's
So
the
it-
question. Did you do depreciation on the property, or did you just include the income and the expenses up to the income?
My guess would be just the income and expenses.
So what I'd encourage you to do is take a look at your tax return. And if you had claimed depreciation, then in the year of sale, all the depreciation that you claimed has to go back in as income. Now, your basis in the property is going to be the fair market value at the date of the death of the person that you got the property from, which would be a fairly large, not just what you paid for it, but the fair
Well,
market value.
they said it was appraised at 105.
And that's what you pay.
Yeah, and then he
your
gave a
basis.
third to each of the.
Okay.
Yeah,
And
I purchased it from the estate.
Okay, so if you sell it for whatever your expense whatever you're selling it for, less your expense of sale plus the depreciation is going to be your adjusted basis, and from that is going to be what you paid for it, and that'll be your gain. Maximum 20% in taxes on the federal, and then whatever state taxes where you live is going to be taxable. But
You could do a real
you might
estate
find out
exchange.
that if you never claim depreciation, it's only going to be just a capital gain.
Yeah, and
Okay.
maybe real estate exchange might be an option too. Doing
Do you want to get another piece of property?
We have a home in Jaffrey, and we're going to roll some of that money into that mortgage because we're paying PMI right now. We want to get rid of that. That'll save us
well,
$300 a month.
So you don't want to. I think this is what I'd encourage you to do. If you want to send us a copy of your tax return, so we can see if they've been depreciating the asset, then we can give you a better direction. But if you haven't been depreciating it because it really wasn't a for-profit rental, you may be happy right now.
And Dan, you might want to also increase your 401k contribution this year if you're working, so that your income isn't as high.
Okay, good idea.
But again, let us take a look at it, because if there's been no depreciation, you're going to find that you're not going to have a problem at all.
Okay.
Okay?
Yep.
Thanks for
All right,
calling,
thank you
Dan.
very much.
Have a great day. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. Our text number is 716-8030930. We're going to take a short break. We'll be back on the other side.
We are family. I got all my sisters with me.
Hey, this is the tax lady, and to us, your family, we love to help you. Whether you're our client or not, we still want to help. And for most everything that we do, that would be giving you information, sitting down, doing some planning with you, there's no charge. We just really, we don't want to see you make some you know, we don't want to see you shoot yourself in the foot. And we see that a lot, don't we?
Oh, well, a lot, very much so. And by the time you see us, there's usually nothing we can do to help you.
Right.
And so that's why
So when
this
you're getting your
gentleman
bright
calling-
ideas, like you're sitting around at night, you and your wife are in bed, and you say, "Gee, I wish we didn't have these credit cards." And so somebody says, "Why don't we take all the money out of our 401k?" And so that's when we wish that you would call us before you do that.
Right. And, you know, and another thing with Dan, he may want to listen next week and even give us a call back because he said he was going to take these proceeds to put it down on his mortgage to get rid of the PMI. Next week, we have Jesse on from Cross State Funding. And I know a couple years ago, they changed the PMI laws. So I guess it's going to depend for Dan when he bought the mortgage. And because I think there's the PMI
Never
doesn't
goes
go
away
away
for the
anymore
newer
on new
ones.
mortgages.
Right.
So
But
he may
maybe-
want to check that out.
Maybe
Right,
he's got an older
absolutely.
one.
And the other thing with Dan, to encourage him, is, and for everybody else, if you're renting, you have rental property, and you really don't have a profit motive, then you should not be taking depreciation, because depreciation is a systematic write-off of that asset because you're in the business of making money. When you're giving it to your kid to live there and all they're doing is paying some of the utilities and things of that nature, you're not collecting rent. They're just reimbursing you for some basic living expenses. That's not what would be subject to depreciation, and so therefore it wouldn't be taxable when you sell it. So it's really important that you're aware of that and you don't set yourself up for failure.
Right.
Right?
Exactly.
Okay, I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Monday's the deadline. If you need to file an extension, you can get a hold of us. We're open today for 2 more hours, and we're open on Monday until 7 o'clock if you need to do an extension. If you need to do the tax return, we can get it done for 2022.
Exactly.
Okay.
Yep.
All right. So, but some we're talking about things that have changed. But one of the things that have changed to the good is energy credits,
Right.
and that's in 2023. And so the new energy credit can actually be a credit up to $3,200 on your tax return
A year.
a year, which is remarkable. So, and when I told all my clients about that this year, they said, "Well, I already did it." You know.
Yeah.
But as long as it's not a new build and you're doing high efficiency windows, doors, furnace, hot water tank, insulation, all of those are going to be subject to the new energy credit, which can be up to $1,200 against your regular income. Plus, if you did heat pumps and biomass stoves, that's an additional $2,000. So you can save $3,200 in taxes. And the whole thing is, you need to know that before you talk to the person going to be doing the energy conservation, because they don't know the tax law. And if you don't have any tax liability, you can be very sad, right?
That's right.
Right. And the big thing, too, is this isn't a lifetime credit anymore. It's an every year credit.
Right.
So that's amazing. So you could do half your windows this year, half next year, and get a credit for both years.
Right. And here's the thing. If you are interested in doing this and you want to take advantage of the energy credit and you really don't have enough money to file a tax return, you can take a look at taking money out of your IRA or out of your pension plan, bringing that extra income to your tax return, then offsetting it with the energy credit, right?
That's
Right.
right.
But if you don't know to do that, then when it's tax time, it's too late.
Yep. They go and they'll like, well, where's my credit? My salesman told me I was going to get a credit. Well, unfortunately, you don't have enough income to qualify for
And
a
that's
credit.
where tax planning comes in. It's really important.
Okay, and I was looking at the statistics that the IRS had put out on this last year's filing season, and a lot of people owed a lot more taxes this year than ever before. And that's maybe because the year before they were lulled into a false sense of security because they had opened up the floodgates and given all kinds of credits and deductions. Now, if you are moving forward, you want to make sure that you don't have that situation next year. And what you need to do, especially if you're working, is change your W-4.
Yeah, and I noticed employers, did you notice this, Chris and Esther, that employers went in and changed their withholdings? I don't know if they were late to the game in doing the new W-4 form, these employers.
I think that people felt that W-4 form, if you take a look at it, is pretty simple. I mean,
is.
if you don't start putting in other forms of income and expenses, but if you just do the W-4, I'm a married person, I don't have any of that, and you sign your name, then you're not modifying the amount that they're taking
Well,
out from your paycheck.
Not really, because the IRS did change the withholdings table where somebody
Well,
who
that's
claims
true.
zero isn't getting $1,000 refund anymore. They might be getting a $60 refund.
Right.
So they did change it. You just got to pay attention. And with electronic pay stubs now, I can tell you, no one pays attention to their withholdings.
Right, but here's the thing. If you want to call us, and I call it like mid-course correction, here we are the middle of May, you can take a look at your pay stub or print it up and give us a call, and we'll give you a kind of a thumbnail sketch of what we anticipate your refund or balance due is going to be, so that you know and you aren't broadsided
That's right.
next year.
Yep. It's really
Okay.
good advice.
We have some text, right?
Yep. The first text says, I can't get my returns to go electronic because I need an ID PIN. So I haven't filed for 3 years. I have refunds. What should I do? I think 19 is now done, right? So the money's
Oh
gone.
my gosh, they got to get 19 done before the
July
due date.
15th.
Right.
Yep.
So you want to get. I'd suggest you come in. We'll work and we'll make sure that we get that filed. But 2019 is going to be closed, and you'll lose that refund.
Right. 2019's got to go paper anyways, but you still have to call the IRS and get a separate ID PIN for each year.
I called the IRS with somebody the other day, and they said they can't give it to you over the phone, and he's moved several times, and they won't forward it, and so they said all the returns have to go paper.
Okay, so let me tell you though, the IRS is Saturday hours now, down at 130 South Elmwood. You can go there from 9 to 3, 9 to 4. Actually, I guess they're there for another 35, 40 minutes. And you can talk to somebody directly at the Internal Revenue Service. This is their effort to give more customer service. So 130 South Elmwood, you can go and talk to them directly. And I know they have Saturday hours as well.
Yep. If they let you in, I think it used to be by appointment, because it's so funny. I called a physical therapist the other day, and they're still, because of COVID, still not taking patients in the office. So it's just funny how it still carries on, you know. But hopefully,
You mean the IRS?
yeah, I don't know.
Well,
Are they
yeah.
doing just
Because I
appointments?
just looked at the IRS website today, and they said go to 130 South Elmwood between 9 and 4, and they're going to see people directly. You have to come with ID,
Yay.
and you have to have your stuff, you know, the questions you have. But this way, this is their effort of helping
Yep.
taxpayers.
Most
Because, you know, I mean, through no fault of their own, there was attrition during COVID, people working at home. The customer service was deplorable
Oh,
at
yes.
the IRS.
But now,
And
it-
so
it
they're
really
trying
is
to make up
much
for it.
better. It really is much better. When we call, you only wait like 15 minutes. It's just glorious.
Right.
Yeah.
So, okay, and then we got another one.
Yep. I just recently retired. Is company pension considered taxable income? Under federal,
Well, and maybe on the state too, right?
if you're younger than 59 and a half.
Well, no, if you had more than $20,000.
Yeah, that too.
Yeah, you
Right?
got to
Those
look
two
at your
things.
age. You got to look to see how much for
So
the state.
yes, your pension is taxable on the federal, and if you're under the age of 59 and a half, yes, on New York State. If you're 59 and a half or older, then the first $20,000 is tax-free. If you're, regardless of age, are retired on a federal, state, or local pension, it's all tax-free in New York State,
That's
Right.
right.
right?
So that's where tax planning comes in, because, and then maybe if he's married, maybe they're below the filing threshold. Did we mention that? And so then it wouldn't be taxable. And so I really need some more details.
Right, but that's the broad general rule of thumb.
Correct.
So, okay, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. So here's the whole thing. If you found yourself behind the 8 ball, change your W-4 at work. You can always call EG Tax. We'll help you with that. But when you change it at work, what should you notice, Chris or Tiff?
That you're
That it
going to
got
get
done.
less in your paycheck.
Right,
Yeah.
right. So, a lot of times people say to me, well, I changed it at work, but did you notice that you got less take-home pay?
Yeah, I always
No,
tell
it
people
stayed the same.
to
Well,
look at the
then it didn't get done.
like Chris says, everything is electronic, and so you don't get that piece of paper many times in your hand, so you've got to look online at your portal,
And that works for people that can understand portals, right? But it is really sad if you are non-electronic.
Yep.
It's got to be so frustrating for people that are non-electronic, and we'll help you with that too, right?
Yes, yes.
All right. I'm Esther Golias, the tax lady from EG Tax. Monday's the 2022 filing deadline. We have 3 offices to serve you. Our Niagara Falls office on Military, our West Seneca office at 2020 Ridge Road, and our corporate office on 1890 Colvin. We're going to take a short break for the news. We're going to be back on the other side with your questions and comments.
We are family. I got all my sisters with me.
Okay, family, this is Auntie Esther, our mom, and this being tomorrow, Mother's Day tomorrow. We just thank you for listening. We consider you family, and if you need anything, don't go it alone. Just give EG Tax a call. At our website is egtax.com. I wanted to talk about if you owe money and you just don't know what to do. First of all, the IRS will let you pay with credit cards online.
Correct.
Number one. So you can do that. The other thing is they're restarting their collection notices again. Because of COVID and the shortness of staff, there was nobody calling you to yell at you and send those nasty grams. But they're starting that out again. Now, if you get that, don't assume they're right. Come to see EG Tax. We don't charge you to look at those forms. And am I wrong to say 50% of them are not correct?
Oh, at least 50%.
So if you just pay them, you're really doing yourself a disservice, and we're very happy to help you. But anyway, just want to let you know that if you owe money, and if the IRS is after you for if they're starting to call you or send you notices that you owe money, don't just assume that they're correct. Come to see us because we'll look at everything for you.
Right. And another thing is too, we just found out with doing research, because that's how we learn, is doing research. Our Canadian specialist, Marcus, just discovered something for people who sold their cottages up in Canada. And they had a credit to help on the federal, but nothing for the state. But there is something for the state. So if you did sell your cottage up in Canada and you want us to take a look at it just to make sure everything's right, to see if you do qualify for a credit for New York.
Because there's an Ontario credit, right?
There is a credit for paying to Ontario tax, even though it doesn't say Ontario tax,
And let's face it, during COVID, lots of people couldn't make it there, so they were selling their properties.
for a lot of money. And I mean, I know one of my clients, it just saved them almost $24,000. So we're not talking small potatoes.
Right. I mean, but if it's $500, it's $500, right?
Exactly.
So, all right, Tiff, you're our offers and compromise guru. So let's say somebody's listening, they owe money, they set up a payment program with the IRS, but they're really just dog paddling.
Yeah, so I was at the office this week, and Sue is there, and she called me in to talk to 2 clients. And so both of those 2 clients she thought would be a really good candidate, and she was right. They were both, it happened to be, doesn't have to be, they were both self-employed, and so they sort of got behind the 8 ball, and they owe, one owes like $70,000 and one owes $45,000. They don't own any houses. After deductions, they don't make a lot of money each year. And so it's doubt to collectability. And so if the IRS thinks, oh, you've got a house, you could get a home equity, you've got money in 401k, 403b, pension, you have an inheritance, then there is no doubt to collectability. But if people don't have this money laying around, those two people that Sue thought would be good candidates. And so, you know, you hear those commercials about pennies on the dollar. And so the one owes $40,000. And so maybe we could offer $850. And so then he gets out from underneath and it's a fresh start.
And they have to be good with the IRS for at least 5 years, right?
That's right. Yeah, they have to be good. So what that means is if
you pay your taxes on
you
time.
pay your taxes on time.
Right.
Yes.
You know, and a lot of times people get behind the eight ball because they've had bad habits.
Right. That's right. Absolutely.
And you have to look at yourself in the mirror and say, you know, I'm not going to do this anymore.
Yep. You do.
I mean,
you know,
you have make a commitment with the IRS that says that I'm going to pay my taxes, and I appreciate that you're reducing my debt by 60 or 70,000. I'm going to change the way I do things.
Yep. I have.
And that kind of goes with anybody. If you find yourself owing a bunch of money every year, even if you can pay it, many times it has to do with just making some bad decisions.
That's right.
Like taking money out of your pension plan when you're under the age of 59 and a half, or
Spending above your means, or
right, or changing your W-4 so that instead of them taking money out, they don't take much out at all. I mean, those kind of things.
sometimes a life.
You have to look at yourself in the
life
mirror and say,
change.
"This is a partnership. I owe this money to the IRS. It's going to cost me a fortune. How can I modify so this doesn't happen again?"
Yeah, I know. I have a brother who's self-employed as a painter, and he makes sure, you know, that he budgets and he sets aside certain money, and that you do estimated payments so that at the end of the year you're not holding the bag. You know, is it take discipline? Yes. Is it take hard work? Yes. And so you really have to hold yourself accountable.
Right, absolutely. So the whole thing is, if you owe a bunch of money and you really can't pay, give Tiffany a call at our office, and she will help you. You have to provide the last 3 months of your expenses, right?
Yep, last 3 months of your bank account statements. If you're a renter, you have to do your lease. You have to do gas bills, electric bills, phone bills,
Bank
car
statements,
payments, bank statements,
credit card
insurance.
statements.
Which is not hard to do.
Nope.
Not hard to do, especially if you're getting rid of a bunch of IRS debt. And remember, they're starting active collection again.
Yeah, and I like to get it.
And you know, so people have been lulled into a false sense of security.
Yeah, and I like to get the offers done really quickly, and so I don't drag my feet. We get it done right away because that's the way to do it.
Right, absolutely. All right, why don't we go to our text?
Yeah, so this says, thanks for your excellent service to our community. Our granddaughter lives in Pennsylvania with her parents. Her parents contributed $10,000 to a 529 plan in Pennsylvania. We contributed $10K to a different 529 plan in New York. Can we both take the state tax deduction for our 10K contribution?
Chris?
Well, I saw the text. I started doing some research. Actually, in PA, if it is a PA 529, you can do up to $17,000, where New York it is $10,000 for a married couple. So PA does give you a little bit more. And I would say as long as the 529
Is a New York 529.
is a New York 529 with you as the custodian and your granddaughter as the beneficiary, it shouldn't be a problem.
Right, absolutely.
So
Good.
And that's great. And so the benefit is the granddaughter is going to make out
correct.
That's
when
right.
she finally goes to school.
And then
Yep.
don't
Okay.
forget, a lot of people get this wrong. You'll still, if she pays money for college, get to take the credit on the federal. You just won't get to take it on the state because that's where
Right.
the deduction is.
And then we have another text.
We do. The other one is a person saying, my mom wants to put her home in my name. She is afraid of nursing home taking it. Is that a good idea? Thank you.
All right, here's whenever you're figuring stuff out yourself and you do not avail yourself of the services of a professional, I bet you can bet that something's going to come awry, because you need, everything in life is like, this is the right way to do it. And so if you do it the wrong way, the result that you want doesn't happen. Many times people add their children to their home or gift the house to the children, and that's lovely, so that the child now owns the home. But the child then, upon your death or the sale of the house, is the one that's going to have to pay the taxes on that. And if that's not what you wanted, you didn't want your kid to pay the taxes, because you would not have paid taxes on it had you sold it yourself. What you really want to do is seek the advice of a professional, a tax professional and an attorney. Now, normally we'd suggest that you do a life estate, which means you get to live in the house forever and ever and ever until you pass or go into a nursing home, but nobody can make you sell the house. The municipality you live in are still going to tax you the same way as they did for property taxes, and you're good, and your heir then inherits the house at a stepped-up basis and doesn't pay taxes. Would be
Right.
the best
Plus-
that I could see.
Right. Plus, the mom would still get the star
The star exemption.
the star exemption, the senior star. If there's a military disc break on the property taxes, that would continue too. If she just puts it in your name, the school taxes are going to go up through the roof. So really, a life estate would probably be the way to go.
And the
So
important thing is,
whenever you're going to do something, you're tempted to say, I don't really want the help of a professional.
yeah.
We're going to just wing it on our own. That's not good. It's really not good.
Yeah, and the important thing is to take action, because, that 5-year look back, the clock is ticking, and so just
Right.
start taking action.
Right, absolutely. I mean, you have to understand, we don't have a dog in the hunt here, except to make sure that what's so sad in what we do is, here you have the kids after the death of somebody who had been gifted the house 30 years ago, and they end up paying all these taxes on the house that mom and dad didn't want that to happen. You know, and had they had more information, then this wouldn't have happened. And so that's why we suggest, if you just start with us, we will point you in the right direction. We're not doing a life estate. We're pointing you in a right direction so that you can do this, so that upon the inheritance of the house and sale of the house, it won't be taxable.
Right.
Exactly.
Or very little of it should be
Yep.
taxable. Okay?
Yep.
Yes.
We got any other text?
Bob
We
from
got
Angola.
Bob from Angola.
Hey, Bob.
Yes, hi.
Hi.
I must say, Tiffany did great for me, taking care of thousands of dollars on these IRS thing, but offer and compromise. But I got a problem where I have a full market value house. It's $60,300, and we want to sell it to my daughter. It's a rental property right now, but we want to sell it to her for $20,000 to live in. How much are we allowed to give her on a property? Do we have to pay a gift tax? Can we put it on a deed with my wife? I mean, what can we do with the taxes?
What's your real goal?
To have her to live in the house and let her enjoy it. And
All right, so
And
do
the-
you want any money out of this?
yeah, we're going to get $20,000 from her, even
right.
though the market value is $60,000.
All right, so
want her
you're
at least
selling
to
it below fair market value by $40,000.
Yeah, instead of giving it to her, if you give somebody something, they're not going to take care
You
of
have
it.
a dog in the hunt.
If you make them, put a bone in the there, then they'll take care of the property.
Yep.
Okay, so if you're giving your daughter a house that's worth more money than what you're
Mm-hmm.
charging her for it, then you are giving her a gift, and you have to do a gift tax return.
Which
Now,
is fine.
Oh,
unless you're, but that's,
It doesn't cost anything.
yeah, unless your estate is going to be worth more than $14 million, it won't make any difference. You're just
But this
doing,
was a
you're
rental
just doing the
property.
gift
One of
tax
a-
return.
Okay, this is one of our rental properties, so I mean, it's still, no matter what, I'm going to have to do a gift tax of the
That's
difference.
correct, because you're giving it to,
60 to 20.
but you're doing the return, but it's almost like you're doing a return, but there's no tax consequences. for it.
Right, because if you sell it for a loss because you're selling it to a relative, you're not allowed to claim the
That's
loss
correct.
on your tax return.
Okay,
So,
We're still
and
gonna
But what
pay
I'd suggest, since you're already a client of ours, is I would suggest you call us on Monday so we can go over all the details with you. But
Uh-huh.
Sounds
to do
like
a
your
gift
plan
tax
is good.
return, it's just to let them know that you've given $40,000 to your daughter, tax-free to her, not deductible to you. You don't have an estate worth more than $14 million. No one will ever pay taxes on the transaction.
Oh, so she won't have to pay a gift
That's
tax
right. It's
either.
tax-free to her.
Sounds like your plan
and
is
not
good.
not taxable to you either.
See, now we've had a CPA in the past, and we talked to her, and I guess they don't know what they're talking about.
Well, I mean, it all depends on how everything was couched. But here's the thing: call us. You trust us. We'll take care of you.
Oh, absolutely.
All
Tiffany's
right.
wonderful.
Thank you. Have a great weekend and happy Mother's Day to
Yeah,
your
happy,
wife.
Happy Mother's Day there, Esther. We see you again.
Thank you.
Well, that was
Goodbye.
the best part of my day.
What was that?
Having a compliment.
let's.
Oh, I know.
Th-
All right,
there's
let's
a
take a short
break,
break.
and
I'm
then
Esther
there's two
Goulias, the
texts.
tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, 716-8030930. We'll see you on the other side.
We are family. I got all my sisters
Hey
with
to
me.
us, your family. I'm Esther Goulias, the tax lady from EG Tax. Monday is the deadline. Monday's the deadline. We got 3 offices to serve you. Our corporate headquarters at 1890 Colvin and Tonawanda, our West Seneca office at 2020 Ridge Road in West Seneca, and our Niagara Falls office in the Wegmans Plaza on Military Road. And we'll be open till 7 o'clock. If you gotta file your 2022 tax return, we can get that done. Extensions, we can do that too. And well, actually, anything tax related. So get your stuff together this weekend, kids. Right?
Yep.
Yep, I know. I had a new client come in on Friday, and he started his own business, and he came in. He's like, "I know I don't have everything." I said, "Well, okay, we got time." So when he was good, I said, "Now, what time do you want to come in on Monday?" He goes, "Monday? Why Monday?" I said, "That's the deadline." That's what he said. "I'm going to spend all weekend getting it together. I'll see you Monday."
absolutely.
So
So it's really the end of tax season on Monday. So here's the thing. So if you owe money, change your W-4 at work, look at offers and compromise. And the other thing is, if you're finding you're behind the 8 ball financially, take a look at what you're spending money on. Credit cards are killers. The interest rate on credit cards can go to 29%. So, and a home equity credit line right now is 8%. So, or if you borrow against your 401k plan at work, you end up paying yourself back the interest over a 5-year period. So if you're somebody that's drowning in credit card debt, and that's why you can't pay your taxes, and that's why you don't want to change your W-4, what I'd suggest you do is that you take a look at doing a home equity credit line. Because, for instance, if you had $20,000 in credit card debt, you're going to pay $6,000 a year in interest.
Correct.
Which means that at minimum payments, it's like a million years before you pay it back. If you got a home equity credit line, your payment would be $488 and be paid off in 4 years.
That's right.
That's a miracle.
Yep.
But nobody can make you move from where you are to get, because it's like being a deer stuck in the headlights, or whatever, deer with eyes in the headlights.
And then I called a few. There's no closing costs, which is really nice. And
You mean on a HELOC?
yep.
Or if you go to your employer and say, "I'd like to borrow against my 401k plan," and you pay yourself back the interest.
Right.
Instead of paying Capital One or Bank of America or all the big ones, Chase,
yeah, and don't do a distribution. Do it
Right.
as a loan.
But to take the money out of your pension plan and then pay off the credit card is really not a good idea. And that's where I hope people can hear the desperation in my delivery here. We want you to call us first. We're not going to charge you to talk to you. I mean, we're going to help you so that you can more efficiently come up with a way to pay off your debt so that you can then make sure that your tax debt is dealt with as well.
Right.
Yep.
Right?
Yep. There's 2 texts. You want me to read one of them?
Yeah, please.
Is there any age when a homeowner stops paying school taxes?
No.
But there's an
When you don't
enhanced
own the
star.
house anymore.
Right.
It has nothing to do with your age, but if you own a home, part of the property taxes are for school, and that's what you have signed up for.
Right. Now, the enhanced star will help to lower your property taxes.
Right.
If
I
your
mean,
income.
lowering it is not eliminating it.
Correct, but lowering it's a really good idea. So if your income is below the threshold that entitles you to that deduction, don't forget to go to your town and apply for the enhanced star.
Right.
Correct.
Yep.
And then some people, this is where tax planning comes in. Some people, they lose their star because there's some transaction for that year. Maybe they sold a house, and so they'll lose their enhanced star, and they'll have to pay extra Medicare, and then more of their Social Security is taxable. And so
Well, that's where you really have to be careful. When you have these windfalls that happen, like maybe the sale of a rental property or an inheritance of a large IRA, there is a way around that, isn't it, for like Irma and everything like that?
Well, there is a way you could protest it.
Right.
Yes, and it's up to Social Security if they're going to accept it or not. I know you had a client that I tried to help, and he had a rental property, he was disabled, and he had to sell it, and they didn't care. They said, nope, that was a personal choice. And he goes, no, it wasn't. I couldn't do it anymore. And they didn't care. They charged him his extra Social Security for Medicare costs for the year. It's a shame sometimes.
Well, and that's the trouble when you're at the mercy of whatever bureaucrat making that decision is. But we've had a lot of success getting those things waived.
Yes. Yep. Yes, if it was a buyout from work, if it, something where we can do an explanation, but if it's, I retired and now my income's going up because now I'm collecting my Social Security and my wage and my pension and and that's going to be an every year thing. Unfortunately, there's nothing to do. It's got to be a one-time event.
But here's the thing. If you get something, you open up the envelope and you go, and by the way, opening up the envelope that says, we need to verify who you are. Don't be intimidated. You got to do that, right?
Mm-hmm.
Right. They will hold up your refund till you do that.
So you want to make sure you do that.
I just had somebody whose 2021 refund, which we amended, was held up until he verified his identity for 2022. So he had 2 years.
So make sure you do that because, they basically put the ball in your court. You have to answer those letters. If you are insecure about it, give us a call. We'll be very happy to help you at egtax.com. And our phone number at our corporate headquarters is 632-7886. And we're always there, 9 to 5, Monday through Friday, during the off season. We're going to be there till 7 o'clock on Monday. And we'll be very happy to help you.
Right. And then our next text is, which is better, a life estate or a revocable trust to pass the house to the kids after we croak? And that was their terminology, not mine. So,
if you put it in a trust, and the trust has the asset, then they're still going to get a stepped-up basis. But it all depends on what you want to do, which is less expensive.
Well, if the house goes in the trust when the person's alive, it's a gift to the trust.
Well, that's true too.
So then the basis becomes what the parents' basis was. So for tax purposes,
Then that would be a not good thing.
right, a life estate would be the best thing.
Right.
So
Well,
You talked me into it. Oh, I also wanted to say, there was something. Oh, I wanted to say, Chris was talking about getting identifying yourself and making sure that you get it done and don't sit on it. There was somebody the other day that was having a really hard time to getting through to that number on the letter. And so we did a phone call to the practitioner line, and then they plopped us into the right portal and we got through. So if you're struggling trying to get through to the phone number, and that's what's holding you up, give us a call and we'll try to help you. There's also an online way of doing it too, and if you don't have that ability, you could do it at our office.
And it's becoming more and more of an issue if you are somebody that is non-electronic. I know it's got to be really frustrating for you. You probably figure, what the heck am I going to do? But, if you need help, we will help you.
Yep.
Yes.
I mean, just don't be intimidated and say, these people are idiots. I don't understand what they want. I used to be able to talk to somebody. We are moving into the AI phase of our society that's going to be dealt with artificial intelligence, and it's just coming down the pike, and there's kind of nothing you can do.
Chris and I went to a restaurant last night, and we were greeted by a robot.
Pretty much.
Yeah.
The robot delivers the food to the table.
It's called Air.
Wind.
Wind. The restaurant is Wind.
Was she good?
She looked like
was
a
it
cat.
good?
She had a cat face, right?
Yeah, but the restaurant was so busy we couldn't even get a table, so we had to go somewhere else.
Wow.
But, yeah.
We'll have to make.
Well, I know AI's coming.
Yeah.
For those of you that don't know what that means, artificial intelligence, robots, all those things. Remember back in the day when we would watch those programs and they had robots? Well,
Jetsons.
But we
meet
will
George
always be there.
Jetson,
We
my
will not
dog,
turn into
Elroy.
robots.
Remember that?
I love that show.
I did too. Anyway, until next week, I'm Esther Golias, the tax lady from EG Tax. We thank you for listening. For you moms, we thank you for being great leaders to your family, and thank you for listening. Have a great week. I'm Esther Golias, the tax lady. Have a great week. Bye-bye.